Happy lunch hour, gang, for a Sunday. Okay, I know lately I haven't been doing a whole lot of lunch videos because there hasn't been a whole lot of stuff to talk about. The Sunday morning news shows usually give you some good stuff. Some funny comments. I mean, Scott Bessent today dogging George Stephanopoulos, I bought your book and read your book, so at least you have one sale on Amazon this week. That was kind of funny. But this isn't a joke. Life that we are living right now isn't a joke. And y'all know me, and I've done this many times already. I don't give anybody a pass just because of who they are. And that includes Donald Trump and the entire Trump administration. Sure, I dogged on Biden for 4 years. When Trump does something I agree with, I'll congratulate him. When he does something stupid, I'll call him out. Okay. So there's a couple of things that have come out here this morning. The first one is on the tariffs. And again, we've rewound the stupid comment of, I'm going to give everybody a $2,000 rebate check based on the tariffs. Okay. Now, the last time we did something like that, last couple of times we've done something like that, it just causes more problems. Think of all those stimmy checks that we all got, right? Now, if we're getting all this good tariff money, use it to pay down the debt. There's a good idea. All right, we're $38 trillion in debt. We don't need to be passing out $2,000 checks. Could I use an extra $2,000? Sure. Could you use an extra $2,000? Sure. But if it's going to cause everything to inflate, where next year it's going to cost me $3,000 to buy what that $2,000 would buy, no thanks. All right. That was the teeny tiny one of the stupid stuff, ideas. I swear there is nobody in Washington, I don't care who understands finance, who understands money. And I mean, this isn't rocket science that I'm going to talk about. I mean, I'm not going to get into talking about complex derivatives here. All right, let's talk about something simple. The latest idea floated around Washington is to make available 50-year mortgages. That'll make housing more affordable. How stupid can you be? All right, first off, let's take a look at this. I bought my first house with a mortgage when I was 32. Okay? That means if I would have paid off that mortgage month by month by month by month by month, I would be 82 years old when that house is paid off. That's greater than the life expectancy for a man. So where I was a young adult getting started in my life, just married, PBJ wasn't even born, okay? I would be 82 years old when the house is paid off. So the chances are I would have bought that house before my daughter was born and die to leave a debt to her. Think about that, okay? A 50-year mortgage is as stupid as it gets, and I'll explain even better to you here in a second. Now, the traditional mortgage, of course, is 30 years, which is still insane. There are 40-year mortgages, okay? They are primarily on like real estate real estate being commercial or very high-end properties, stuff like that. You can get a 40-year mortgage. But no, they want to make available a 50-year conventional mortgage to Joe Average to buy your standard house. The median house price in the United States as of today is $410,800. So you're going to take out a loan instead of over 30 years, over 50 years for $410,800. Now, y'all know this just as well as I do. If you can pay it off quickly, the interest rate on a 15-year mortgage is lower than it is on a 30-year mortgage, usually by somewhere around a full percentage point. Okay? So if you can afford to make higher payments, you take out a 15-year mortgage and pay off your house that much quicker, which means in a long haul, not only because of the lower interest rate, because of less time, you are paying significantly less in interest to the bank. Now, I want to dispel one rumor that I keep hearing all over the place about prepayment penalties. Prepayment penalties are virtually non-existent in the United States on mortgages. They are strictly forbidden on FHA loans, USDA loans, VA loans, anything that is Freddie Mac or Fannie Mae compliant. Combined between all of those, that accounts for more than 99% of the mortgages in the country. Yeah, maybe you've got a prepayment loan that's from some shady mortgage lender because you couldn't get any sort of mortgage. You know, you were super subprime and, you know, Joe Loan Shark gave you a mortgage. That's about the only place you're going to find a prepayment penalty on a house. Okay? Don't believe me? Go look all that up too. All right? Because I've had some interesting conversations on Twitter this morning about it. And I have the facts to prove it up. Go figure. So I did the math on these mortgages. Okay? Now, I didn't include property tax. I didn't include PMI or anything like that. No home insurance. Just the mortgage. All right? This is the difference. Remember, the whole idea of this is to make a housing more affordable to people. If you bought a $500,000 house, okay, and put basically $80,000 down on it or whatever the hell it is, if your balance was $410,800, I don't care how you get there, but I did it that way so I didn't have PMI put in the calculator. If you bought the average house, $410,800, on a 30-year mortgage, which as of today, the 30-year mortgage is 6.22%, okay? Your monthly payment, write this down because it's going to make sense here in a second. Your monthly payment, according to mortgagecalculator.org, would be $2,521.30. Okay? So a little more than $2,500. Now, like I said, you know that a 15-year mortgage is going to have a lower rate than a 30-year mortgage. So it goes to assume that a 50-year mortgage is going to have a higher rate than a 30-year mortgage. So I looked that up and said, what would be the projected rate on a 50-year mortgage? And the banking industry says anywhere from 0.5% to a full percent higher than the 30-year. Okay. So let's take 0.5%. Let's say it goes up to 6.72%, right? If you had a 6.72% mortgage for 50 years, your payment would now be $2,384.07. So you are going to save about $140 a month. That won't buy a week's worth of groceries. That, depending on the size of the house, might pay the monthly electric bill. Okay. But you've now added 20 years to the mortgage, all right? On the 6.72 mortgage, on your $410,000 note, over 50 years, you will pay about $1,019,000 in interest over 50 years. Where on the 30-year mortgage, you will pay $496,600 on it. So if you want to take out that 20-year mortgage at the lowest potential rate comparatively now, it'll only cost you $500,000 more over the life of the loan. Okay? This is making housing affordable. But let's go the other way. Let's say it comes at 722, a full percentage point, which is, of course, more likely because it's about a full percentage point you drop from 30 to 15 years. You can assume we're going to probably go up 1% when we add 20 years to the mortgage. I still think this is the low end. If you took out a $410,800 loan for 50 years at 7.22%, your payment would be $2,541 a month, which is more than the $2,521 a month it would be if you took out a 30-year loan for the same price. How is that making anything more affordable? Your payment went up. Longer term, higher payment. Sign me up. Okay. This is where, now you start talking about you're paying $1,113,000 in interest on a $410,000 loan. You're paying for your house nearly 4 times. Who is smoking crack? Maybe it wasn't Hunter that left cocaine in the White House. Maybe it was some congressman. Because this is nuts. If you want to make housing more affordable, let's start building houses that are affordable. Not everybody has to be, 25, 32 years old and buy a McMansion. They don't need 3,000 square feet. The first house I bought when I was 32 was a condo. Okay? That was it. It was, I think, 1,400 square feet. And you know what? There was plenty of room for me, my ex, and PBJ when she was born. Did we live there forever? No. We moved on over time. But you know what? That condo, because I've looked, still exists. And people are living in it. And it's a nice neighborhood now. Because, when I was there, it was cornfields. This is Plainfield, Illinois, off of 59. Between 75th Street and I-55, if you know the area. Go look up Pear Tree Circle. You'll find the street. But, yeah. Where are the houses that you can buy for, the condos that you can buy for $200,000? That's what people should be buying. Not going out and taking out loans on these massive homes. And you say, well, that's the average home price. Yeah, you know how average is figured out? You take everything from the top to everything to the bottom and you come up with an average. That means this is the median. Half of the homes in the United States are below the 410.8. Okay? So that means they're out there. Oh, but I have to have the marble countertops. And I have to have this or that or whatever. No, you don't. Okay? Formica worked really well for all those of us in my generation for a long time, We did well. Don't let them fool you. We need to start building smaller homes, starter homes. You see all the pictures all the time. How was it that in the 1950s they could afford, a family could afford a house and a car and kids on one income? Take a look at the picture of the house. The house is maybe 1,100, maybe 1,000, 1,100 square feet. That was it. It wasn't huge. That's how they could afford it. It wasn't a monstrosity. People got bigger houses over time by buying one, getting some equity, saving some money, building the next one, et cetera, et cetera, et cetera, et cetera. Y'all know that. I know that. But every time we hear somebody complain about housing prices, rent I get. Rent's a different animal. Okay. They can talk about complaining about interest rates. We're at historically average interest rates right now, guys. I hate to say this, okay? You got used to free money. Not you, but I'm talking to the general public. You got used to free money and cheap loans. This is average. This is normal. Okay. Okay. Bring your expectations in line with reality. I'm sorry, you're 24 years old. You just finished college with your underwater basket weaving degree. No, you do not expect the brand new Cadillac, the corner office, and the mansion on the hill. It's not how it works. It's not how any of us did. Before all these numbnuts go back and start trying to blame the boomers, blame Gen X, we ruined everything. No, they've all been coddled too much throughout their lives that they think everything is cheap and easy. See, the difference is the greatest generation, the boomers, the Xers, we worked to get where we are. Try it. You might like it. But this 50-year mortgage idea has got to be the stupidest thing I've heard come out of DC all year. Because not only in the long run is it more expensive, but it's more expensive tomorrow. Do not let anybody get fooled by this. Those are the numbers. Go plug them in yourself. You'll see what I'm talking about. The idea is to be affordable. Okay, $2,500 a month. You go, that's a lot of money. It's also what rent is. And granted, we're going to give you the difference between who's responsible for maintenance and property taxes. I get that, okay? But nobody said these people have to go out and buy $400,000 houses either. Start small, build your way up, just like you are going to be with your career. Nobody graduated college and wound up the CEO on the first day. You start off at an entry-level job. You start off in an entry-level house. You should start off in an entry-level car. But until these younger generations realize that the world ain't handed to them on a silver platter, the government needs to step back and stop screwing them and telling them how these ideas are great. Because the only one who's going to get saved with 50-year mortgages is the banking industry. 1,000,001. Are you kidding me? And we know how corrupt the banking industry is already. Have a good afternoon. Pinball out.